All right, guys, welcome back. So let's have a look at UPS. So UPS this year so far, it's down 18% year to date, definitely underperforming the S&P 500. This is the daily chart of the stock, and if we switch to yearly chart of the stock, you can see last 3 years negative returns. And this year so far, it's December, and most likely we're going to close down year to date. And before we jump into the specifics of this stock and where I'm watching this name, I would like to show you guys this. When is usually the best time to buy shipping stocks, like let's say UPS? So here are the few highlights: strong economic growth, growing e-commerce market, low fuel prices, stable or growing global trade environment. And you want to be cautious when overall economy in a recessionary environment and we have a high inflation and disruptions in the supply chain. So also, of course, company specific factors. So just by looking at these highlights, you can definitely highlight that not everything is going well for the shippers, right? And of course, some are doing better than the other, but when it comes to UPS itself, yes, they have been definitely in a survival mode at this point, including high interest environments, high fuel cost last 3 years, and also the very recently 2023, 2024, they have been paying more to service their debt. These companies have very large outstanding debt, and if you take a look at the UPS alone, 26 billion net debt balance, and you can see it takes, I don't know particular percentages that what they're paying, but quarterly I'm sure they're paying a lot than they used to when interest rates were a lot lower. And if you take a look at the overall this is US retail gas price, basically chart of the average gallon nationwide, right? So we're at the moment $3.10. Again, this is average, but if you take a look at it from 2020, where average we had around $2.50. You can see we have even seen in 2022 high of the highest gas prices, 5.1 on average, but on average we stayed at high mid threes, okay, fours, and it definitely impacts those names. And of course, they even had these measures, fuel surcharge, and also they were raising their rates a lot. But from their very recent earnings report, you can see, let's just glance over what has been happening in terms of their earnings. So, of course, it's declining as well in terms of the operating profits and margins. We can see, 2023 operating profit, yes, improved. Operating margin improved. But if we come down to take a look at the what is the take home operating profit, you can see has declined. Margin, slight a bit of a decline. But in general, if you take a look at, if you even compare this stock to FedEx, it's not apples to apples. These guys have more ground presence, while FedEx is more of an air focus on that department, where they are the best, right? They can definitely charge you crazy. If I'm sending something overnight and I want it to be delivered overnight, I would definitely go to FedEx, because I know they're the ones to go to when I want to do that. And also I'm willing to pay the premium, so they can get away charging me a lot more money, versus when it comes to ground shipping. And of course, these guys have overnight shipping as well, but in terms of air, I don't think they are a significant of a competition. And when you are focused, you can see even on its profile, domestic ground package, 50% of the volume, probably the division market cap. Domestic ground package, 11%. Next day air, domestic deferred package, 5.7. International, of course, FedEx is also very international. Supply chain and others. So let's go take a look at the chart of the stock. I'm not going to go too much dive into this one because I'm not seeing 2024 numbers. You can see annual revenue, slight a bit of a decline, of course. Annual profit, operating profit, significant decline compared to 2022. But 2022 probably is not going to happen. But also another thing I wanted to show is in the last few years after pandemic, of course, Amazon, right? I'm sure you have never heard of it, but some people have. Amazon Logistics. Take a look at these revenues. Partial volume for Amazon in 2022 and 2023. Partial volume for UPS 2022, 2023 declined. Of course, Amazon has told about that very early on. I think they would be slowly walking away, and of course they have their own deliveries, and you can see the revenue as well for Amazon Logistics, how it has been growing. So somebody is eating their lunch, right? Slowly, of course. And you can take a look at the FedEx, USPS, pretty much about the same, and others very insignificant for 4.5 billion, 5 billion. So let's take a look at the chart of the stock. So what I'm watching in terms of the price action, you can see I have drawn this channel where I'm going to be I have been watching this channel for quite some time. That this stock, even before this 2021, 2022, where we had extreme everybody at home ordering online. Of course, a lot of people still have that habit of now a lot of people into online shopping. But you can see even when we were having really good time in 2018, 19, 17, this stock was not performing well, right? So we're back to those levels almost. So 120, this was the highs of 2017, 2018, 2019. So I'm going to be watching this stock in this channel, ultra short term. This is your downtrend that we are watching. And also stock is below its 200-day moving average. At the moment, if we zoom in a little bit more, all-time lows, 52-week lows, 123. So if this stock flushes a little bit more, it is not oversold at this point to me. It can definitely hit $120, maybe even 110. And the array of interest for me would be to swing it maybe if it hits around 110, ideally even $100. Capitalization of UPS is, of course, it's very large, $110 billion. And if we take a look at it in terms of, let's take a look at this stat where they are trading in terms of their future forward price to earnings compared to others. So UPS trading at almost 14.7 times of its future earnings, while FedEx 12.7, JB Hunt 25, EXPD, I don't know about them as much, but still slightly you're paying premium even stock sitting at these levels. Dividend, of course, they have increased their dividends over last few years. The yield at the moment, I think that's the only thing a lot of people could be holding, 5.06. That's the dividend yield for UPS at the moment. And per share quarterly, they have been paying for the last 4 quarters or so $1.63. So what has to happen for this name to switch and do some significant changes? It is reminding me of course, I'm not gonna say that it's messed up as Boeing is, but in terms of price action, they have to do some radical changes when it comes to like capturing the market, because I do still think that Amazon is going to grow crazy. Amazon logistics, a lot of people have no clue about that part as well, but they're growing very fast and it's very on demand. And when it comes to like last minute deliveries, especially, they're doing pretty good too, in my opinion, again. But right here, right now, to jump into this stock thinking that interest rates are gonna, of course, Fed is cutting the rates, but to jump into this stock assuming that everything is gonna turn around, economy is gonna turn around, I don't think so. I don't think we are even in a recession, but it feels like a silent recession last year or so, because you can see by discretionary spending, a lot of people are down. They're cutting the spending on unnecessary stuff, and things are still expensive. Inflation is still there, and there's also fear of resurge of inflation. So I don't think this is going to impact these stocks well, and I'm gonna be watching this stock basically a little bit more pain, and I'm not bullish this stock at these levels, and I'm gonna be watching ideally those low hundreds for the stock to go lower. At this moment in time, it could be in a choppy consolidation zone, but if you zoom out a little bit more, this stock is still in a downtrend. So that's what I'm watching for UPS, and that's my thought when it comes to looking at like surface level, looking at the stock in general. And hope you guys like this. Don't forget to like, subscribe, and see you in the next one.